Welcome to Earnings Central. In this video, we'll break down Tilray Brands' second quarter fiscal 2025 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q2 was $216.3 million. The company actually reported revenue of $211 million, missing expectations by 2.5%. However, this quarterly revenue marked an 8.9% increase compared to the $193.8 million reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q2 was a loss of 3 cents. The company actually reported a loss of 10 cents, falling short of expectations by 7 cents. This result also reflects a 3-cent decrease compared to the loss of 7 cents per share reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. Tilray showed some impressive financial performance this quarter, with gross profit jumping 29% to reach $61.2 million. This significant increase reflects their focus on operational efficiency and cost control. The beverage segment was a particular bright spot, with sales surging 36% compared to last year. This growth came from their expanded portfolio of craft beer brands and successful integration of recent acquisitions. They're now among the top craft beer players in several key U.S. markets. The international cannabis business continues to shine, with revenue up 25% year over year. This growth was primarily driven by expansion in Germany, Poland, the UK, and Italy. Meanwhile, the wellness segment, led by Manitoba Harvest, saw a solid 13% revenue increase as they launched new hemp-derived products and grew their core business. Looking at profitability metrics, cannabis gross margins improved by 400 basis points, showing that their focus on higher-margin products is paying off. And despite significant investments in growth, Tilray maintained a strong cash position with $252.1 million at quarter end, giving them flexibility for future opportunities. Now, let's shift focus to some of the key insights and takeaways from the earnings call. First up is their major SKU rationalization program, which they're calling Project 420. They're eliminating over 300 SKUs and focusing on their most profitable products. While this might impact short-term sales, it's expected to drive better margins and operational efficiency in the long run. The German medical cannabis market is emerging as a major opportunity. Tilray saw their medical cannabis flower sales grow by 55% in Germany after new regulations went into effect. They're well-positioned in this market with GMP-certified facilities in both Germany and Portugal. Looking ahead to spring, Tilray has an extensive innovation pipeline ready to go. They've already presented these new products to retailers and distributors, with particular excitement around their non-alcoholic beverages and Delta 9 offerings. Speaking of Delta 9 beverages, they're showing early promise in several states, with the company leveraging its existing beer distribution network to expand reach. A key theme throughout the call was Tilray's strategic focus on higher-margin products. They're willing to sacrifice some market share to maintain better profitability, particularly in the Canadian cannabis market, where excise taxes create margin pressure. Finally, Tilray believes they're well-positioned if the U.S. eventually legalizes medical cannabis federally. They estimate this could be a $250 million opportunity for them, leveraging their existing medical cannabis expertise and production capabilities. The company's transformation from a pure-play Canadian cannabis company to a diversified consumer packaged goods company continues to progress. With operations spanning cannabis, craft beer, spirits, and wellness products across multiple continents, Tilray is building a unique position in the global market. That wraps up our recap of Tilray Brands' second quarter fiscal 2025 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.